So the Fed has finally cut interest rates. But why does the mortgage bill look like it's going to explode? Well, there's a big disconnect between what the Fed does and what happens with mortgage rates. And Americans are about to see this.
When the Fed cuts rates, it technically has nothing to do with mortgage rates. And in fact, when the Fed historically cuts rates, mortgage rates usually immediately rise, which is counterintuitive and the opposite of what most people think.
Federal Reserve, they came out and they cut rates. What happened to mortgage rates? Well, they went up. So let's get over to what caused this to happen and why mortgage rates went up when the Fed dropped rates. But based on all this right now, just to give you a recap, MBSs are still falling. So mortgage rates are continuing to go up. So even though the Federal Reserve cut rates, folks, mortgage rates are once again on the rise. Don't miss it this time.
And the 10-year Treasury rates are staying high because of inflation. And the investors expect there to be higher inflation, thus keeping the 10-year Treasury rate high. I'm just a regular Joe Schmo, and I can tell, at least I feel like inflation will just keep going higher. And if we feel like that, and the guys that know what they're talking about are keeping these rates high, they know more than us. And I'm expecting things to get worse before they get better, that's for sure. I mean, it's currently October and interest rates are at 6.34. And when you look at the summertime rate of 6.25, peak summer when homes are selling, prices are the highest, and our rates are higher right now. So what does that tell you? And yes, the Fed is expected to cut the rates even further, and that will eventually lead to lower mortgage rates, of course. But that does not guarantee home prices will go down. And really, that's the main problem, right? It's not a few mortgage percentage points. It's that a house that was $200,000 costs $400,000 now. That's the main problem.
I'm only looking at houses that are price reduced, period, the end. You tell your agent, that's what I want. If I'm doing it, I'm not even going to the agent. I already know the house is way inflated to affordability. I already know that. Don't insult my intelligence otherwise. I'm looking at houses that have a 5 in front of them that need to have a 2. And it's been sitting on the market for 5 or 6 months. They've reduced it by $80,000 and they're still at 4 or 5 and it needs a 2. They did zero, zilch, nada to fix it up, to invite me to want to even be interested in moving my family in there. It's filthy. Now you might say I'm insulting people if I offer them that. Guess what? Offer them that. If you have a real estate agent that says you're wasting their time because they're so busy right now. I just have so many buyers and sellers climbing all over me, man. I can't. I don't have time to write you a lowball offer when a house has been sitting on the market for 5 months. I don't have time to call up the listing agent and be like, yo, what is up?
I've seen plenty of stories of people talking about prices are coming down. Yeah, they're coming down a little bit, but you literally have houses that are priced double what they're worth. So even if you bring it down 5-10%, you're still getting screwed on the deal. You had people in the 80s, they didn't care about an 11-12% interest rate on the mortgage because houses were $40,000. Now it matters a lot when houses are, what's the median home price? Let me take a look. $439,000. That's the median home price. I believe that when the rates do drop, prices are just going to go up even more. Hopefully I'm wrong, but I don't think so.
The reason why millennials cannot afford houses is that despite housing prices quadrupling over the last 20 years, the median income adjusted for inflation remains exactly the same. So every boomer and Generation Z that tells you to suck it up is full of crap. Because they were making the same money you were and paying 400% less for their house.
Of this house behind me in California, they've cut the price by $150,000. Now that sounds like a pretty good price cut, right? But wait until I show you what the current listing price is after those price cuts. $950 grand. So they cut it from 1.2 million to 950 grand here in Temecula. And it's still sitting on the market because California has become so insane when it comes to the lack of affordability with home prices and mortgage payments. I want you to think about this, everyone. A $950,000 house, an hour outside of San Diego, which is a story unto itself. How can prices here be this expensive? Your monthly payment on that house is nearly $7,000 a month for mortgage, taxes, insurance, and HOA. Now, $7,000 a month is $84,000 a year, meaning that if you wanted to buy this house, your gross household income would need to be at least $250,000.
Oh my God, I bought a house in California. You want a tour? Come.
Okay, I had to throw that in there for a little bit of comedic relief. I know the situation is serious, but sometimes we need to have a laugh. That's unfortunately what it's coming to. A lot of people are living in their cars, living in storage containers, looking for RVs, just anything they can do to avoid these prices. And then how are people that are making $35,000 a year, $40,000 a year, how are they going to make it? 70% of Americans don't even make $65,000 a year. So you have 70% of people that completely don't even have a chance of owning a house. And if they were to get married, and then their spouse would also have to be making around $65,000, $70,000 a year. Oh, never mind. You still can't qualify for the median price home. I don't know how people are doing it. Is everybody just a doctor killing it out here in this world? Like, how are people affording $4,000, $5,000 a month mortgages? That is insane.
Tell me why my mortgage just went up $1,000 because of escrow's mistake in calculations.
Has anyone on here ever had almost a 50% increase in their monthly mortgage due to escrow?
I really thought that if I paid my mortgage payments in full and on time every month that I wouldn't lose my house. That's not exactly what's happening. Our escrow analysis finally came the morning of my 40th birthday. I'm in the bed drinking my coffee at an antebellum home in Natchez, Mississippi, and I get an email, and I'm like, I shouldn't open this like on my 40th birthday, whatever. But I've been waiting for it. I didn't think it was going to be anything. I thought it was going to be like no big deal, like no change. I open it, $3,700, second year in a row, shortage. Our mortgage payment will now be $2,700 a month, which is $600 more than it was supposed to be when we took out the loan. Isn't that fun? Yeah. I can't pay it. I mean, like, we can't pay it. It's insurance. Our insurance is going up $400, annually. So I called my insurance agent today, and she was like, okay, so that was last year, because like they did that like for the previous year. So she was like, okay, that was last year, but I did get yours a couple days ago for this year, the renewal, and it's going to be going up another $300. If it went up $300 last year and we're at $3,700 shortage, even if like I pay the shortage in full now to keep the thing the same, the payment the same, we're just gonna have another $3,700 shortage again next year because insurance is still going up again. When I have a payment due, I pay it 100% in full on the due date, no exceptions. It will be paid, period. Then I'll have to pay for like all the selling the house junk, like fixing anything, and might have to sell this beautiful house and get a smaller one. When we bought this house, like our first house that we lived in for 10 years, my last payment on that mortgage was less than $1,000. So I don't know if you have any comments or, nice, mean, whatever, or like what can I do? Tell me what to say to the mortgage company. Tell me what to say to my insurance agent if I have to talk to her again. Tell me what to say to a realtor. I don't even know what realtor I'm going to use. Have you ever experienced anything like this before?
The last 3-4 years, my property taxes have gone up, and that in return has caused an escrow shortage for me, meaning my monthly payment had to increase or just come up with thousands of dollars out of nowhere to pay that deficiency in the escrow. It's a lot, man. We're getting pushed to the limits. And even with these Fed rate drops, I don't think the mortgages are going to come down much. Inflation rises, prices will rise, and then thanks for 1.5% discount on my mortgage rate, but now the house that's worth $200,000 is worth $500,000. Pat on the back, I'm saving so much money right now. Let me know down below if you guys have experienced this with your escrow going up out of nowhere and just, in some cases, doubling your mortgage payment. And if you're still watching, please consider subscribing to the channel. It helps out a lot so I'm not talking to myself. And let's get back to the video.
I had to tell this woman today that she couldn't buy a house, even though she had 2 jobs, had $100,000 to put down, and had a 700 plus credit score.
It's been brought to my attention that we need to properly define what affordable housing is, because I am tired of us screaming at these boomers until we're blue in the face over the fact that we all know that renting right now, for the foreseeable future as well, is more affordable and cheaper than owning/buying a home. And this isn't just like a discovery I've personally made. This is like a really well-researched topic, and there's like a million different articles you can find about it. And the fact of the matter is times are changing rapidly. Yes, even back in 2020, it was still cheaper technically to buy if you could qualify, but nowadays in most places it is cheaper to rent and more affordable. And you'll notice mostly the people arguing that this isn't true are most people who bought before like 2023, or the people who are literally trying to sell the houses to you. Like, homelessness statistics haven't reached one of their highest rates ever for no reason at all. So let's talk about what affordable housing is defined at. Not subsidized housing, affordable, just like the average person or even slightly below average can afford. And they say that's usually about 30% of the gross income for your house. And that is including utilities and taxes and whatnot. Okay, so the average person in the United States on both salary, interestingly enough, and hourly is bringing in roughly $4,600. 30% of that is roughly $1,400. So that's how much you can afford to pay after mortgage, taxes, utilities, all of that for your house. Which means the price of a home we could consider affordable is $150,000. In most places in the United States, good freaking luck finding a decent home for that price, because the median price of a home in the United States is almost $400,000. That's like 3-4 times that price. And again, even a $300,000 home is assuming you have $48,000 to put on a down payment that day that you walk in. Average American household, like collective, had $41,000 in savings. That's not even enough. And the median number was $5,000. So depending on how you like to pick your numbers, neither of those are making the cut.
And now the average price of a home is over $400,000. Man, good luck to people. I don't know what people are going to do. Tell me down below if you guys are planning on buying a house, if you're waiting for prices to drop, if you're okay with the renting. Have you just completely given up and just like, hey, I'll never be able to afford a house. It is what it is. And what do you think has to happen for houses to become affordable again? So, okay, the feds will drop the rates, inflation will go up, house prices will go up, and you'll feel like you're at the casino. Like, oh, hey, here's a free beer, buddy. Good job. Thank you for spending thousands of dollars with us. Now call an Uber and take your ass home. Yes, mortgage rates are important, but let's not forget the most important thing. These prices. The prices are insane, and people cannot afford these homes. In my personal opinion, inevitably there will have to be some sort of big market crash. There has to be, right? Like, you can't just have houses double in price in the last 3-4 years and just like have it going up. Or maybe you can. I don't know. Let me know what you guys think below. Thank you for joining me in another Public Views video. Like and subscribe, and I'll see you in the next one.